Alia, what are you doing?
Oh, I'm reading news about Forex and I still don't understand how Forex works and its permissibility in Islam.
Oh, don't worry, Alia. I found a video about Forex in Islamic capital market and I want to share with you. So, let's watch the video!
Forex exchange, or widely known as FS, is an activity that is mainly involved in the currency exchange, which is the largest security market in the world. Forex trading is the activity of trading the currency of one country with another currency that can be easily understood as currency pairing. The activities of Forex trading will run for 24 hours within 5 days a week. The concept of leverage is very common in Forex as it gives the trader a position to trade more than what they actually have in their accounts. For instance, in FSTM, a trader will be given to trade currency for a maximum of $2,000 for each $1 they have spent in their account. However, the real practice is that the Forex traders only speculate on the fluctuation of currency that eventually will give them a portion of profit or loss based on the money that they bet. There is no actual transaction of buying and selling of currency, as the trader only gamble on the outcomes of the market volatility and getting profit from it. It is legal for an individual to trade currency in Malaysia because buying and selling foreign currency in Malaysia is expressly limited to licensed commercial bank, Islamic bank, investment bank and international Islamic bank, as well as the money changer. Additionally, the Sharia Committee approved the financial product that comply with Sharia. However, warnings against unlicensed forex broker have been issued by the SCM since 2020. From a conventional perspective, online forex trading is seen as one of the highly profitable business activities and traders friendly. This is because forex trading suits a variety of trading styles. The forex market operates the whole day so that the trader can choose their own trade styles as they can do the short trading. This can be seen as easy money for the traders because they can have a flexible work style while collecting profits. Still, there are some flaws that they discover from forex trading. Forex trading is known as a gambling system that is disguised as an investment that is practiced mostly by an individual investor. Little traders who trade money using their own wealth are attracted to the easy process of entering forex activity, where traders can easily open accounts over the internet and do not require huge amounts of money to get started. Forex also involves the transaction of buying and selling cash with cash that the rates can be manipulated by speculation. Forex also can generate a profit from favorable fluctuation in exchange rates, and the speculation will affect the supply and demand aspect. According to Sharia, online currency trading is not permitted for a variety of reasons. Among them is purchasing money on credit, which is plainly in conflict with the soft contract as it includes usury. While our soft must be completed on the spot, forwards, future options and swaps all have different aspects in the delivery and payment of money. This will result in the appearance of riba al-nasiyah. Other than that, it is against the Sharia law to sell the currency with a future delivery date. In this deal, there are no callback concept terms. Since this transaction does not involve an emergency, the callback provisions allowing for delivery delays does not apply, since the broker cannot instantly credit the trader's account with the currency that the trader has acquired. Forex transactions are not callback. Short-term investment that includes speculating on a rise in stock or assets values may involve high level of risk or even gambling. Islamic law does not prohibit transactions just because they contain speculation, but they might be forbidden if they enter gambling or an excessive amount of risk. Trading forex on an individual basis has aspect of gambling and speculation, since it always ends in one party gaining profit at the expense of the other.
Islamic finance industry is faced with equal exposure to the market risk every day. Islamic FX forward contracts have been established to manage the risk which come as a hedging mechanism for the investors to lock the current price of their transaction as protection from the risk of market volatility and fluctuating currency rate. Islamic scholars agree that it remains a necessity for investors to secure future deals without potential loss or additional costs that might occur in the future, aligned with the achievement upon protection of wealth in Maqasid Sharia. The current exchange rate can be fixed with a bilateral promise between the buyer and seller with mutual consents to conduct their transaction as a shield upon any additional cost on a future date. As the currencies are treated as a ribawi item, it must be exchanged on a spot basis to avoid the element of riba in the transactions. However, there are limitations in practicing Islamic FX forward, as it is usually done with the banks and it is possible for both parties to have the same intention as speculation on the exchange rate can be happen to earn profit. online forex trading can be seen as an activity of making a profit out of movement of other countries' currencies. It has been noted from the conventional perspective that forex trading resembles gambling as investors are predicting on the currency movement and the inherent element of riba. It is believed that online forex trading is impermissible because of the inherent elements of gambling and speculation which are clearly prohibited in Sharia. Involvement of uncertainty in currency trading is one of the reasons also, as the small players are only betting their money, while the big movers in the market are the ones who determine the market outcomes. In addition, currency is classified under ribawi item because it holds the role as a medium of exchange. Thus, any trading for profit is tantamount of riba and is a major sin in Islam.